Thank you so much for your time this afternoon. Basani, let's talk about that improved profitability that we saw. The main drivers, was that from loan issuances or the bond repurchases?
So while we've had a 9% increase in our sales over the last 6 months, the increase in our profitability is actually not due to that. It's due to the fact that we are writing much higher quality loans, which means that the bad debt charge going through our income statement has declined quite significantly, which is really what the increased profitability that is attributable to. However, we have also bought back 1.9 billion rand of our bonds, which is what you've just noted as well, which has meant that we've managed to decrease our interest expense, which also has added to our profitability.
And this has also, of course, contributed then to 8 billion rand in the balance sheet. And I just want to get a sense from you as to where you'll be directing those funds to in terms of investment opportunities.
So you would have seen that we've invested quite significantly in our digital migration, into transforming ourselves towards becoming more of a digital bank. So we will definitely be spending some of that on continuing to develop the platform to ensure that we continue on that journey. But you may also have noticed in our results that we have about 7.1 billion rand of our funding that is maturing over the next 18 months. So a fair chunk of that will go into that. However, we are also starting a journey of refinancing the bank during the course of this year as well. But I might just kind of go back to the spend on our digital journey. I mean, that we're very excited about. You may have seen that in April of this year, we launched our transactional banking product called My World to our staff, who are now playing with it and trying to break it and find all the bugs so we can kill the bugs before it goes out to market at the end of this year. And we're really excited about that. I think it's going to really transform the bank and position it as more of a retail bank, a holistic retail bank, as opposed to a monoline business, which the bank has historically been.
And I mean, as you say, you're creating a holistic retail bank for the consumer, and in doing that, you've also been able to stage an amazing turnaround as an organization. But is this growth sustainable? What are your conversations with investors sounding like?
So I think the growth is definitely sustainable, particularly because so far, the growth in our sales numbers, for example, has been somewhat muted. And that's predominantly because we are still selling personal loans as our main product. As we diversify the bank, that will start to change. But absolutely at the moment, that is pretty much what we are selling. And the growth in that part of the market has been very low. In fact, I think we've only started to see an increase in that growth at the end of 2017. And it's sitting at about 1.3%. So as you can see, I mean, it's been quite flat. So our ability to grow has pretty much been predicated on being able to take growth away from our competitors. So our conversations with our investors really are going to be more around how we grow transactional banking, how we grow our deposit book. You would have seen that's also another very good news story for us. We've almost doubled our deposit book over the last 6 months alone. We have great ambitions for what that book should look like, because it's a very key part of how we're going to fund the bank going forward.
You're going to tell us what you want it to look like and in this time frame that you're looking to see it happen?
Well, we're going to be announcing our final year
results. To break a story.
I know, right? And I absolutely can't give you more information than that. But we're really hoping to have made significant progress in the growth of that book, so we can announce some really good results at the end of the financial year.
No, absolutely. And I mean, you've also been able to reduce your credit loss ratio. And how have you been able to do that in the current environment?
It's because we have a stunning credit team. I think it really comes down to that. The guys have been very creative in putting together scorecards that are able to better differentiate between good and bad customers. We are in the process currently of putting in a strategy that will help us to be better able to do that. And the value of that is that you are better able to choose the customers who will create a book that is of lower risk. So what we've seen in the last 6 months, and in fact over the last few years, actually the last few reporting periods, is that the quality of our book keeps improving. So about 88% of the business that we write today, that we originate today, is to lower risk customers. So they're in the 5 lowest risk buckets of our 22 buckets that we rate risk in. So we really are starting to attract a lower risk customer to the bank, which means that we're able to provide less against that book so we can increase our profits, but also it means that we have a better quality book and can tell a better story to the market as we go out to our investors on the roadshow to talk about our results.
Final question, would this be then the opportune time for African Bank to relist?
Not yet, but don't lose that thought. We definitely do want to go back out to market at some stage, but the reality is until we manage to really build a compelling story and gain traction with the diversification of our product set as well as of our customer base, and really gain traction with our digital strategy, until we've done that, I think it's going to be very difficult to show to the market that African Bank is an investable value proposition. So we're giving ourselves a few more years, but we definitely do have that still on our radar.